And welcome to the OANDA MarketPulse charting analysis update. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, we've got a few charts to take you through today. The overriding theme, I think, is very important with regards to the markets and how we look at the chart today. For quite a while now, one of the key themes has been the oil movements, and that is really what's driving the markets today. Yesterday evening, we had the UAE oil minister, energy minister, come out and suggest that OPEC were open to discussions with other oil producers regarding possible production cuts, and given the fact that this oil decline has been largely a supply side story, an oversupply story, this has of course led to some support for oil and some buying in it. Now at the moment, as I'll show you with the chart here, for me this looks more like a kind of dead cat bounce rather than an actual reversal. Now there's a fundamental reason for that, but there's also a technical reason as well. The fundamental reason is this isn't the first time that we've had these kind of reports. We've had these comments from OPEC officials on a number of occasions, and each time they've either been rubbished or the rumours just gone away, or they've been denied by other OPEC energy ministers, and I think that's what's going to happen. I've got no reason to believe at this stage that this time it's going to be any different, and I think the markets perceive it that way as well, which is why the technical supported at this stage as well. If we take a look at this rebound, you could say, well, yeah, we had a nice little rebound off these 2580 supports, which was a known support level, which I've highlighted previously. Potentially a nice little hammer candle here, which can typically indicate some form of reversal. But the problem is, in order for this to really be confirmed as a reversal, what we need to see is a move back above Wednesday's highs, and we've not seen that or anything close to it yet. That would also see previous supports being taken out, so we're looking at 2840 to 2880 here. We've not even come close to that yet. What we've effectively been left with, if we look at the 4-hour chart, is a rising wedge formation. So for me, this still typically looks quite bearish, and moreover, like the last two candles, each rally that we've seen into $28 have been heavily sold into. So this is where the sellers are coming back in and seeing opportunity and driving prices lower. We saw it on this occasion. Now the candle finished quite a little higher, then we saw the buyers trying to drive it higher, buying into this story. Sellers came back in, drove it back down towards these 2730s, and I'm not seeing any reason now to believe that we are going to see it break through these 2880s. Now, of course, if we do see that, then maybe I'll start to look at this a little bit more favourably. But right now, this looks quite bearish to me. I do think we are potentially going to see a move through the bottom of this rising wedge formation, and we are going to see a bit more pressure either towards the end of this session or really next week back on these 2580s. Now, like I say, the overriding theme in the market right now is oil. What's happening in oil, and how is this affecting the market? One of the more direct ways that it's impacting the market is through the indices. So when we see the oil prices rebound, we are seeing the overall energy sector rebound. We're seeing basic materials rebound, and that tends to drive these indices higher as well. And that's what we're seeing today. Now, what's interesting here is yesterday we were trading back around these 1805, 1810 support levels, which has been a notable level of support for some time now, as I've repeatedly highlighted on previous videos. And once again, we did see a rebound off this level. Now, this, of course, will have been driven largely by the rebound no late in the session yesterday. We're continuing to see a bit of green today. But again, this is not an aggressive rebound. This does not suggest to me that we've seen a reversal. This looks, again, like a bit of a dead cat bounce and suggests that this is very short. This is potentially going to be short-lived. Potentially looking here at, again, some form of rising wedge on the 4-hour chart, which is typically bearish. It's typically a continuation pattern, a bearish continuation pattern when found in a downtrend. Rising wedges always really are typically bearish, whether in an uptrend or a downtrend. So at this stage, I'm not seeing any reason to believe that this is over. Moreover, early next week should be very interesting, assuming we don't see more pressure on these 1805s, 1808s before the end of the session today. Early next week should be very interesting. We're going to be in a low liquidity environment. We've got the US on Monday, which is closed bank holiday. We've got the UK half-term holidays, which typically lend itself to low liquidity. So I think that the start of next week could be very interesting for the markets, especially if the overall risk sentiment in the market is risk off and overall sentiment is low. We could see a lot of pressure on these 1805s, and should they break, then we could be looking a fair way down for your next major support. And I think psychologically we are looking far more bearish if we do see a break of these 1805s. Really, the next notable level for me looking there is around these 1735 to 1740 levels, prior support, prior resistance, and I think this is just psychologically a major break if we do see it early on next week. Moving on to commodity currencies next, or in particular with oil. Of course, Canada is as an exporter of oil. It has a direct impact on the economy, and therefore it has a direct impact on the currency. Now, what I find interesting here is you'd look at the Canadian dollar CAD and WTI, and you think that these are similar setups. You've got a sell-off, and then you've got this rising wedge. Now, of course, these are on different time frames, so I'm not saying these are exactly the same, of course, but you've still got the same setup in terms of a rising wedge following a sell-off. So you'd look at this and think this looks typically bearish. The problem that we've got here, though, is it's all about knowing when you're trading these markets, what's the main driver of the markets and how does it impact what I'm trading. Now, this is, of course, it's dollar CAD, so it's going to be impacted by two things: the dollar, which is quite weak at the moment, but also the Canadian dollar. Now, the Canadian dollar is very reactive to the movements in oil. So if we actually do see more pressure on the downside in oil, you'd expect typically to see some downside in the Canadian dollar. Now, this has been one of the reasons why we've seen so much weakness in the dollar over the course of the last 6 months, throughout this period, in particular since the start of December. We saw a lot of weakness in oil when it broke through from around these 134s towards 147. The problem being that if we do see that weakness in WTI, so we see a break of that rising wedge and a move back, as I highlighted, back towards these 2580s, if that did translate through to weakness in the Canadian dollar, then you'd typically expect the dollar CAD to rally back maybe towards these 141s or beyond. So that's why it's so important, because technically this looks like quite a bearish setup, but if WTI does break lower, I would not be comfortable anticipating a move lower in the dollar CAD, because weak oil typically means weak CAD, and a move lower in dollar CAD in line with this trend would mean a strengthening Canadian dollar. Now, of course, like I say, there's going to be two drivers in this currency. The dollar is going to be one, so I'm not saying it's impossible that we could see this move lower, but I would imagine that a weakening in oil would inhibit the ability of this pair to move lower, and if it did move lower, potentially wouldn't be as aggressive as it would if WTI moved high. So if we see a move higher in WTI, then that could therefore force a move lower in this, and that would make me feel a lot more comfortable about this break lower in dollar CAD. Let's stick with commodities. Let's go to natural gas now. There's just a couple of little points here. I've highlighted previously the break of this ascending trend line, the retest of the ascending trend line, and the 61.8 fib held as resistance. Nice little bearish confirmation here. Now we've seen a move lower back towards these 193 and 194s right now, and this is going to this looks like it's going to come under some pressure before the end of the session. If we see a break below here, we could potentially be looking at a move back towards these lows. One notable level of support potentially on the way would be around these 182s, where it found support previously. But I think this is the key test for me right now. These 194s is going to be a big test, big test for support for this. If we do see a rebound off this level, then the first resistance I'd be looking at potentially is around the $2 handle. Of course, it's a key psychological level. It's a previous level of support. Beyond here, I'd be looking back towards these 215s, prior resistance. If we can make another lower high, then that will suggest that the pressure is mounting to the downside, and further pressure would come under around these 194s. Next up is copper, and the point I wanted to make with relation to copper is it looks like it's found itself back within this trading range that it was trading in throughout November and December. So this is $2 at the support level and around 213.65, I think it is, 213.50 to the upside. Now we did broke momentarily below this level, but now having broke above, we've gone straight back up towards the 213.50 and run into resistance once again as we did previously. And now we've retested the support, $2 key psychological level, previous support, and we've seen a rebound off this level as well. So I think this is looking a bit more bullish, but it does look like we remain range bound in copper once again. Finally, euro sterling. And I think this is looking potentially primed for a reversal, but of course I need much more confirmation at this stage. We've got this rising channel which appears to have entered into over the past week or so. We broke through these 77.50 resistance, ran into resistance once again around the 79 cents level, which was prior resistance that I've highlighted, prior resistance and prior support that I've highlighted on previous videos. And now we are retesting these 77.50s as new support, resistance turns support, as we highlight on a number of videos. But what I find interesting about this right now is that the momentum is really shifting down. So we've had these new last two highs have both come on falling momentum. Now this isn't just falling momentum on one or two indicators. This is the stochastic has got falling momentum, the MACD histogram's got falling momentum, and confirmed with the MACD moving averages also showing falling momentum. The key test now is going to be, if we do see another push to the upside, how far is it going to go? Will we see the previous high taken out? I'm really not convinced that we can at this stage. If we see a failure to break through these 78.80s, again that would mean a lower high being made after the falling momentum, which is going to be particularly bearish. If we see it run into resistance, say around these 78.50s, then we could potentially have a head and shoulders on our hands. So this could become very interesting. Nice little reversal setup. For me, this is looking a little toppy at this stage, and I do think we could potentially see a move lower in euro sterling in the coming sessions. The fact that we've had this strong rally would suggest to me that it is potentially due. If we do see a move below those 77.50s, we could be looking at a move back to the downside. The initial support I'd be looking at is around these 76.50, 76.60, with it being previous resistance and also support at one point. Below there, we could be looking back towards the 75.30s, which was a key level of support on a couple of occasions back in February, early on in February, and also back in January as well. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.